Back with the market right here in ET now. Let's just revisit what the GIFT Nifty and the implied open are looking at. Considering yesterday we had kind of a fab finish, if you will. The broader market as well climbed up quite nicely, and pretty much all sectors participated in yesterday's move. A minuscule figure, but a buy figure from the FIs as well. Actually, over the past fortnight, you've seen that the selling has quite abated from the FI fraternity, and on odd days you have had a buy figure as well. In fact, we've got Nishal Maheshwari and Somal Mehta as well joining in on the show right now to talk about what they're making of the market setup right now. Nishal, Somal, hi, morning. Somal, let me start off with you. The debate, of course, is about how the street is going to react to Axis Bank's numbers. Tell me, what's the chart setup looking like for Axis?
See, overall, if you see, private banks are looking great from here. HDFC definitely is looking great. Axis Bank, it started its upward bounce much earlier than the other banks. So I'm quite positive on this bank. The downside supports would be around 1140, 1130 levels, which is very close to 200 daily exponential moving average. Now, the rally which we've seen in the last couple of months, I think that is a new start in the medium-term outlook, and I'll be expecting this medium-term trend to continue on the upside for a target of above 1250, 1300 levels for Axis Bank. The rally which we've seen, it's an impulse, it's a 5-wave up, and a small correction was expected, which is going on right now. And once this is complete, I think the next level would be 1300.
Okay. And what about an HDFC Life, Somal? Give us a take on that.
HDFC Life, again, HDFC Life and SBI Life, very similar patterns, very similar charts. Multiple support around 730, 735 levels for HDFC Life. I'll be expecting this entire range, which we have seen in the last couple of months, to break on the upside. It is high time for a good breakout on the upside for this stock. I'll be expecting a target of at least 800, 820 in HDFC Life. Supports is around 730, which is 200 daily exponential moving average.
Nishal, do you like, hi, good morning, first off. Do you like something like an HDFC Life, and how are you reading through the numbers of some of these life insurers? Of course, we'll have more coming in, but we had ICICI Pru come through, HDFC Life come through, soft set, but you know, the commentary seemed far more positive, far more constructive.
Yeah, morning to you and your viewers, and season's greeting. So I think insurance companies are getting their act together, basically. Yes, a bit disappointing as far as the growth numbers are concerned. But I think if you really look at, given that the stocks have not done anything for the last, I think, 3-4 years now, I think the setup seems to be good. This season is, the last quarter was expected basically to be a bit muted. With this GST change also, I think definitely the next 2 quarters, the earnings is, the top line is expected to be better. I'm positive on SBI Life Insurance more than anybody else in the sector.
And what about some of the capital market names, Nishal? HDFC AMC's numbers were also quite decent, but stock has run up, right? How do you play capital markets if HDFC AMC, if you like it, give us the thought process there. And how else do you play it, if at all not HDFC AMC?
I think the asset management business has done really, really well, basically. If you look at it, the growth still seems to be there. The SIPs, which are the bulwark for the whole AMC business, I think still continues to be pretty solid. So HDFC AMC has done obviously very, very strongly in the last 3-4 years, and continues to deliver quarter after quarter. So that remains to be one of our top picks, basically, as far as the whole asset management company is concerned. I would also look at some of the wealth guys. I think there is still 3-4 guys who dominate the business out there, and there seems to be much more value available. Valuations are reasonable. and the runway is much longer given they are multi-product. So I prefer wealth guys more than anybody else in this industry.
Interesting. Nishal, hi, morning, and wish you a happy Diwali in advance. But Nishal wanted to understand, what about Axis Bank? Because the street is quite split and divided, if you will. A, there is the valuation comfort. B, not so much comfort when it comes to the earnings. It's a mixed bag, if you will.
I agree, basically, Aisha, and wishing you the same. But Axis has off and on continued to disappoint on the credit front. So this has been a trend for Axis. I think it's better to move out to some other stock, basically ICICI in particular, or HDFC. Axis has got a checkered history, if you may see, for the last several years, and that continues to be there. So I think it's better to move away and get into some more stable stocks.
Well, let's just address some of the buzzers from yesterday and look at the way the street rewarded Persistent. Shot up 7.5%. You had ICICI GI, almost a 9% move on the futures, and then there was the Idea as well. Kunal, I remember, I think last week you had a buy call on Idea. Still holds?
Yeah, it still holds.
Okay.
So, and I think we are seeing a change of massive trend for Vodafone Idea. It's not a short-term rally, which I'm expecting. I think this could be a sign of a major trend which could be coming by for Vodafone Idea. Something which I think the stock has not seen for the last 2-3 years of the price trend. That, I believe, is the key positive for Vodafone Idea over the near term. The stock is moving in the band of 8.5 to 9 to 9.25, I think, which it hit last week or so. But then I would believe that a breakout should happen pretty soon for Vodafone Idea. It will take some time for the stock to come back into the double-digit level, but I think once it does, it will set up a new base for itself and then continue to march up higher.
What was the previous high when it did hit those double-digit numbers?
That 13? Was, I think, 13.4 something.
Yeah. Right. Nishal, you don't have any fundamental view on Vodafone Idea, right? Is it still in a void in your list?
Totally. I don't think there's any fundamental case to look at Vodafone at all. I do not see this company making profits for the next at least 2-3 years. There's no chance of them making any profit. So I don't see any reason for it's a best at trading buy.
Nishal, how are you looking at some of the IT companies? You have 3 of them coming with an earnings today: LTI, Infosys, Wipro.
So I think IT, if you look at the 2 or 3 companies which have come out with the results, I would say basically better than expected. Though on the top line, it may not have done much. Persistent has done really well, but Tech Mahindra or TCS, HCL Tech was slightly better than expected. But I think what the commentary is telling you on all of these, that there are signs of some green shoots out there. These companies are figuring out basically what kind of growth, and they are pretty hopeful that the interest rate cut is going to actually start driving up the business as far as US is concerned. Now the issue about the whole industry remains to be how AI is going to impact. And I think that is a much bigger overhang on the industry rather than actually seeing that what's really happening on a short-term basis. I think that's where you have to figure out companies which are more focused on AI, which are going to transition faster, are actually going to be the winners in this leg of the race.
Okay, and we really saw that in Persistent, didn't we? But Infosys is slated to come out with its numbers today. Let me take it across to Mansi to figure out what is it that the street is expecting.
IT major Infosys is slated to post its quarterly earnings, and we'll start with the revenue drivers. We expect an uptick of around 6% in terms of revenue. The growth will be basically supported by the BFSI vertical. If we talk about the margins are expected to remain stable at 21% is what our expectations say. In particular, talking about the headwinds, the concerns in the overall setup, the higher S&M investment, legal professional costs are some of the concerns which will trigger the results for that matter. Talking about the tailwinds, the positives, rupee depreciation and operational efficiencies which we have seen in the company and the development of the company and in the operations of the company will act as the tailwinds in particular. Guidance, we are expecting the revenue growth to be in the range of 1 to 3% on a year-on-year basis, and also if we talk about the margins, 20 to 22% is what is expected. Note the guidance excludes the Versant Group acquisition impact, so that is an important note in the guidance which we are talking about. It excludes the Versant Group acquisition impact. Lastly, talking about the key monitorables which one needs to watch out for: the discretionary spending outlook, H1B visa impact, Gen AI deal win, and revenue productivity impact. All the IT companies are now talking about artificial intelligence and developing the workforce in the AI category. The vertical performance, deal TCVs, and pipeline and pricing trends. These are all the key monitorables which we need to watch out for when the Infosys numbers will come in. All in all, we expect stable margins, revenue to drive growth, and at the same time, the profit will also see an uptick of around 4%.
Okay, thank you so much for that, Mansi, and that's of course Infosys, which will come out with earnings later today. TCS has now obviously settled in terms of stock price action. Infosys will take center stage. Somal, how are you viewing the Infosys chart structure, and anything in terms of a trade visible?
Infosys, I'm okay. I'm not very excited about Infosys charts at this point of time. It's been very range bound between 1400 and 1550. It's a broad range, and I'll be expecting this range to continue. Not expecting much from Infosys, but my preferred pick in IT pack would be on the large cap side. I'll pick TCS with a stop loss of around 2860. And the targets would be much higher, above 3,200, 3,400 levels. So I'll be expecting TCS to take off from here. The mid cap space, I'll be looking at Coforge. Coforge looks good, about 200 daily moving average, high top, high bottom formation, great breakout from a small triangle pattern. Stop loss would be close to around 1700, and the targets would be much higher, above 1880 in the medium term outlook.
Okay. Kunal, how are you viewing IT as a pack?
So I think it's better to try and concentrate on stocks which have given a breakout, or at least the results are out, because I think that's the bigger shocker for the markets right now. So I think in that sense, Persistent looks to be good. The stock saw a 5% drop in the open interest yesterday. So that tells you that it's a blend of short covering which has happened more for Persistent. You also look at TCS, I think a stock which is stabilized above the 3,000 levels or just closer to that kind of a point. And post results, we've seen the stock being a lot more stable. So that's another name to look out for. So it's better to concentrate on stocks which have either given a breakout or the event, which is the results in this case, I think is behind them.
Just looking at the entire infra space, because that's where you're finally seeing, some good news actually trickle in. We're just looking at the order inflow. Look at a KEC, for instance. 2 consecutive days, sizable orders. Another 1,000 plus crore rupee order is what they've bagged for a substation in Saudi Arabia. Look at a BEL. They've got an additional orders worth about 592 crore rupees for multiple systems and equipments. That's the other stock which is also going to be in focus. Look at an MTAR Technologies, for instance. Another international order almost equating a little above that 67 odd crore rupees. So that's all looking very, very strong. And clearly, Nishal, after a bit of a pause, the entire manufacturing theme also seems to be coming back. Although the talk of the town may be consumption, but doesn't seem like manufacturing is going anywhere. In fact, most experts believe that, defense has got to be part of your core portfolio. Forget about the sell-off that happened last year. It's time to get into those stocks again, or at least add up to the positions. What's your view, or rather the preferred lot within the entire manufacturing umbrella?
So I would go basically wherever the government is helping the sector basically in terms of policies. If we really look at it in the last 3-4 years, 2 or 3 major sectors the government has helped or government has been positive about is one is solar industries. So I'm not talking about the stock, I'm saying solar as an industry. Then the second one is defense. These are the two major industries. And now one of the more emerging sectors basically which is there is the semiconductor. Now we have to also look at some of the adjacent industries which are going to be helping them. So power is one very, very strong industry basically, which is going to be, so it's part of solar also, it helps the semiconductor industry also. So these are some of the industries basically which will continue to do well. And I see there are at least next 5 to 10 years, there is a very long way for these industries to go. So these are some of the industries I would actually start keep on focusing as far as manufacturing is concerned.
Nishal, what about consumption? You have Eternal earnings coming in today. You have Nestle coming in today. Do you see Q2 to be a better one, or the entire, because of the GST, the entire shift of volumes will now be seen only in the Q3 quarter?
So I would actually put the consumption into two buckets. One, you are saying the staples, the FMCG category. I do not see volumes improving. I think some of them already said that the volumes have been, and largely because the last 10 days they lost a bit of volume given that the GST was GST got announced but got implemented on 22nd of September. So I think they lost some of the volumes. So I think there's going to be another disappointing quarter for FMCG. But FMCG as a whole, basically, if you really look at it, there's no point on holding into your portfolio, given that around 10-12% kind of growth, and the valuation still continues to remain at around 50 times plus. So, but I'm very positive on the platform companies, especially the Zomatos and the e-commerce companies of this which are operating. So, as a disclosure, I have all of them basically in my portfolio, whether Eternal, Urban, Paytm, I think I have all of them, and I'm quite positive there because they have if you really look at it, they have been able to change their model once they realize that they have become a listed company, and they are now racing towards profitability. Some of them have already become profitable. Others are gunning for profitability in the next few quarters or years. So I think growth is out there. Yes, valuations are challenging, but that's the way I look at it.
In fact, some of these consumer tech companies, and I was just looking at the charts, look at an Urban company from 151 thereabouts yesterday, it shot up and closed in at 167. It's quite a sizable intraday move for Urban company that it saw in trade yesterday. Was quite the mover, about almost 9%. And then look at Eternal. I mean, it's been the darling of the street, nifty name now, and that's now at that 350 plus level. Or for that matter, even Nykaa, which finally seems to be, breaking out of the slumber, and that too has been doing very well of late. Kunal, you track this space very closely. What's the list of buys, names which already haven't moved up too much?
So I think Nykaa could be one of them. I think the stock has not moved up as compared to the sell-off the stock has seen post-listing. Eternal, we were discussing that, I think this is the 8th or the 7th consecutive month of a price uptrend for Eternal already in the last 5-6 months or major part of this calendar year. Prior to that, I think 2023-24, there was a phase where the stock moved up for almost 13 or 14 consecutive months on the upside, and that recovery led the stock move from sub 40 levels or 40 thereabouts to almost 200 plus. So the stock is moving in stages, it's moving up higher, and it's moving into a zone of a high confidence on the upside. So I think that's a positive for Eternal, and it just tells you that dips like maybe a 10%, 20% correction from the swing highs generally become very good buying opportunities for these kind of stock prices, and you have to have an outlook which is at least 12 months to 18 months for this name.
Two stocks to mention. Urban company, you mentioned about it. The lock-in for 3% of the equity is opening today, so you can see some downward pressure if people are going to sell that. And the second one is Angel One. Numbers were good on a quarter-to-quarter basis, but they're also increasing the brokerage, minimum brokerage from 2 rupees to 5 rupees, and it's happening from November onwards. So that's something which we need to keep a watch.
Yeah, I think Nishal would have a view over there. Nishal, the entire brokerage space and the kind of heightened competition that one sees. I know you talked about wealth management being the favorite of the pack, but what about brokerages?
So I think the only worrying factor out there is the valuation. Otherwise, I think the industry per se is doing pretty good. I think you will have some of these challenges which we have history. If you look at the last 25 years, these kind of challenges on the regulatory side will keep on coming. But if you really look at it in the last 25 years, the volumes have gone up by 10 times. So that's the way basically this industry is going to evolve. Still, I think around 10 or 12% of Indians actually only invest into equities. So we have a long way to go. So not really worried. I think these regulatory changes are only temporary. The only thing is the valuations. Once you get into a comfortable zone in terms of valuation, I think it's good to look at. I don't track Angel One, so not sure actually what valuation it trades at.
Okay, and Nishal, what's your take with regard to real estate? Every day we have this one or two good announcements. Either it's a quarterly update, either it's a it's a set of numbers. And today we had Oberoi Realty's numbers, which came out very, very decent set. Frankly, execution continues on an elevated trajectory, at least when I'm looking at it sequentially. What's your take on real estate, and any specific geography you're liking within the real estate pack?
So I think they continue to do well, and the setup is really good. If you really look at from the macro point of view, you have liquidity, which I think the banks are pushing, government is pushing basically liquidity into the system, and you've got a lower interest rate scenario. I am very hopeful that October we didn't get a rate cut, but definitely we will see it in at least one or two more rate cuts happening, given that kind of what kind of inflation number we have. So that's going to support this whole real estate sector. As far as the areas, I think metros still continue to remain the favorite for me. Mumbai, Bangalore, maybe a bit of challenge out there, given it is more focused on IT and you may have some job losses in IT. But Bangalore, Delhi, I think remains to be pretty good. Mumbai, Delhi remains to be pretty good.
Somal, some of the real estate players like Oberoi in Mumbai and Prestige in Bangalore, how are these looking on the charts for you?
I think I'll focus more on Lodha and DLF. These two are my topics in that space. I'm definitely looking for a very good rally in most of the real estate stocks in the medium term outlook. But my topic would be Lodha and DLF. DLF, I'm thinking by my analysis says that targets would be around 800 levels in the medium term outlook. I'll be expecting much higher targets on DLF, but yes, for now, 800 would be my target, and the stop loss would be around 736. So DLF would be my top pick from the large cap side. Lodha, again, an ending triangle pattern on the daily charts have completed now. High top, high bottom formation for Lodha. Trading about 20 daily moving average. Great setup. I think the stop loss would be around 1136, and the next target for Lodha would be 1250, 1260 levels.